Hello, hi everyone. Good evening to all of you. Thanks for joining me here today for this session of online webinar. So my name is Ethan. I am the education lead here hosting this webinar from the IG Singapore office. So understand that many of our attendees usually they do not only have the brokerage account here with IG Singapore. You may be trading with our other IG officers. But for today, right, I'll just be sharing this reversal trading with you guys. So it doesn't matter, which product you are trading. So this is actually like a concept or theory that can be applied to, any of these products or asset classes that you are trading. Okay, so once again, if you are joining me from Singapore, it's actually 7 right now. So if you are having your dinner, on the way home from work, just feel free to sit back and tune in. But before I begin, right, I just wanted to do a very quick mic check. So if you're joining me on your laptop or desktop, right, you should be able to see this GoToWebinar. There is this panel on the question side. So if you're able to hear me, right, don't mind, I just trouble you to click on this question box, right, and then just type in a yes. Okay, so if you're joining me on mobile, you should be able to see this question tab as well. So if the audio is working fine, please just let me know so we can proceed. Okay, working perfectly, all good. Yes, yes. All right. Okay, thanks everyone for answering. Thanks, Max. Thanks, Alex. So I see there's many yeses coming in, so the audio, no issues. So I'll just proceed on. Okay, so I think I see some familiar names, so I just don't want to, talk too much about myself, but just a quick background for those who are new to IG Singapore's webinar. So my name, once again, is Ethan. I am the education lead here in IG. Before that, I was actually in another broker called Philip Futures, who has rebranded to Philip Nova. So I've been always been on the business development side of things and also kind of like a account managerial role at the broker side. Okay. So for today, right, before I start, I just wanted to highlight that this session, right, in no way am I trying to give you any form of like a trading advice or investment advice. So everything I share today is purely for educational purposes. And also please take note that whatever concepts or theory I share today, nothing is guaranteed as well. So in trading, there is no 100% kind of like a winning strategy. But still, I hope that the information and knowledge that I will be sharing with you today will help you to get make better decisions, or give you more perspective when you're looking at charts or when you're trading. Okay. So before I start off, I just wanted to highlight there'll be just a few things that I'll be sharing. I'll be mainly covering things like reversal candlestick patterns. I'll be covering things like market structures, how you can spot potential reversals before we dive into the strategy itself. Okay, so just let me see. All right, so if you guys have not typed in anything in the question box, right, or you have not located the question box at all, I'll just urge you to just locate it right now. Just take about 10 seconds to find it, so that if you have any questions as I'm going through, right, just feel free to type those questions in as well, so I can time and time I will try to answer them when I can. Okay, so though I don't want to waste any more time, so I'll just start off with what I want to share today. All right, so firstly, right, when we talk about reversal trading, right, let's just be very clear and identify what is a reversal. So when we talk about reversal, right, it is actually a turnaround in the price movement. So basically what we are trying to do is to spot when an uptrend will turn into a downtrend, or when a downtrend will turn into an uptrend. Okay, so basically that's it. So over here, if we look at this particular chart, right, you will be able to see that there are actually some key areas when the trend changes from an uptrend. So previously you noticed it was an uptrend, and then it changes to a downtrend, right? And then potentially it could be some form of pattern forming here before it turns up to an uptrend again. So what we are doing today is we are looking to explore how we can spot these zones and and to be in the correct direction as per the trend. All right. So the first thing we want to look is, using candlestick patterns to actually identify the potential end of an existing trends. So when we talk about candlestick patterns, right, it's actually a way of displaying information about underlying assets price movement. So if you're new to trading, right, candlestick chart is actually one of the most popular components of technical analysis. So it actually enables a lot of traders to interpret price information quickly And from just a few price bar, right? And over time, all these candlesticks can actually form patterns that traders use to find opportunities within a market and potentially help to spot reversals as well. Okay, so before we dive deeper, let's just take a look at some of the common reversal candlestick patterns. The first one we have here is this pattern that we call it like a hammer pattern. Okay, so the hammer pattern is actually this candlestick pattern that is formed, right? And you notice that the body, right, is actually a short body with a long wick. Okay, so for those of you who are not familiar with candlesticks, right, it's actually a price action within a day. Of course, if you change the chart from daily to, let's say, a lower time frame, a 4-hour or 1 hour or 15 minutes, right? So each of this candle will actually signify where prices went up or down within that particular time frame. So a candlestick has 4 points. You notice that there is four points. One is the opening, another one is the closing, and then these two long wicks, right, are actually the shadow. So this is basically the high, which is here, how high the underlying market went for that day, and this wick here is how low it went for that day. So if it's a red candle, it means that the opening is the top of the bar and then it closed lower. So this is the opening, this is the closing, and hence it's red. And if it opened, it went down and then it went up and then it closed higher than the opening, then it is a green candle. Okay, so only for those who are new. So what happens here in this pattern, right? We can see that in this hammer pattern, right, it's actually showing that there is selling pressure within the day, right? So the sellers push down the price within this period, but ultimately, right, there were buying pressures that managed to push the price back up. Okay, so when you see this small body with a long wick, right, actually means that there was selling pressure, but actually there was also buying pressure towards the end, right? So you see that there's this hammer pattern forming, and of course this particular hammer candlestick, right, can form anywhere within a chart, right? So it can form, you know, in an uptrend, it can form in a downtrend, but typically, right, if we see this at the downtrend, right, it has more meaning to it, right, because it can signal a potential reversal. Okay, so the next pattern we have here is what we call a bullish engulfing candlestick pattern. So the bullish engulfing is formed by two candlesticks, right? So you see there's one here, one here. So the first one is actually a short red candle, and then the next candle here will be a larger green candle that completely engulfs the previous candle. Okay, and what this means is that it shows that the second day, right, it opens lower than the first, but eventually it closes a bit higher, right? So again, this can be formed anywhere within the chart, but typically when you see this in a downtrend, right, then the potential direction that could actually mean will be that then a trend reversal may be incoming or impending, right? So this is just some of the reversal patterns if you use candlesticks. And we can also see that this is what we call a morning star, right? So morning star is a three candlestick. It's a three stick pattern. Okay, so there is a red bar here. There is a short body candle in the middle, a bit like an indecision. And then the last one is like a long green candle, right? A bullish candle. So what it means is that, right, when you see this in a downtrend, right, it's a sign that the initial day's selling pressure over here, right? So within this three bar, this is the first bar, the initial selling pressure is easing up. Okay, so there's buyers coming in already. So there could be a potential kind of like a trend reversal here. And of course, this is the opposite. We call it the evening star. So again, this is a sign that the buying pressure initially in the uptrend, right? You know, on the third candle, there was selling pressure that erasing all these gains from the uptrend. Okay, so what this means is that potential reversal to the downside. Okay, and we also have the shooting star. So previously what we saw was a hammer, right? So something that looks like a hammer just now was a long wick below, and then this small block on the top that looks like a hammer. So over here is just the exact opposite, right? So what we see here is that sorry, this is a shooting star. Yeah, so there is this opposite of a hammer pattern. So it shows that there is actually buying pressure initially, but ultimately the selling pressure was so strong that we managed to push price back down. And then again, you can see this at any point in the chart, but typically there's more meaning to it, right? If this pattern is forming at the end of a uptrend. Okay, so it's a potential bearish reversal pattern. And the last one is just the opposite of a bullish engulfing. So instead of a green candle eating up a red candle, it's just a red candle eating up a green candle, and has more meaning in the uptrend. So at the end of the uptrend, if you happen to see this, not guaranteed, but there could be a potential reversal. Okay, so other than just looking at some common candlestick patterns, right? So if we take a step back, right? So these are actually the candlesticks, but if you look at the a bigger picture, a bigger perspective, right, and take a step back, right? What we are seeing here is trying to see the market structure in a bigger picture. Okay, and when we talk about market structure in trend reversals, right, we are looking for potential reversals in an uptrend or reversal in a downtrend. Okay, so if it's trending up, we are trying to see where is a potential point that the markets can reverse, or if it's in a downtrend, where can it reverse? Okay, so in an uptrend, right, we see that the prices here, right, it forms a series of higher highs, right? So the highs become higher, and the lows, right, the dips, right, also becomes higher. So you notice that there is a series of higher highs and a series of higher lows. Okay, and of course, this is a chart. This is a textbook example of an uptrend, right? And again, this trends, right? This uptrends of this series of higher high and higher lows, right? It can be within any time frame. Okay, so over here, you notice that this chart is on the hourly time frame. Of course, it can be on the 5-minute time frame, the daily time frame, the 15-minute time frame, etc. You get it. You get the idea. It can be applied to any time frame. But the smaller the time frame you go into, right, the more market noise there will be. And if you look at the longer time frame, let's say a daily chart or weekly chart, then the stronger the trend will hold. Okay, so in an uptrend, right, what are we actually trying to do? So we don't want to go against the trend. So if you see something like an uptrend, right, we are actually not trying to sell. So what we are trying to do is to trying to buy, right, to follow the direction of the trend, because that is the path of least resistance. Okay, so if it's an uptrend, you're trying to sell at the top, then if prices happen to trend higher, right, then you'll be taken out, right? So what we are trying to do is we are trying to follow where the general direction is. If the general direction is going up, we will try to have a long bias. Okay, so the next one, of course, is just the exact opposite, right? So now we are looking at the downtrend. Okay, so in a downtrend, right, we notice that the price, right, it will form a series of lower highs, right? So the highs, right, it becomes lower every time it retraces up, right? It becomes lower, and the lows, right, every time it goes back down, right, it's a lower low. Okay, so in terms of the market structure, right, if you notice that it is in a downtrend, then what we are trying to do is we are not trying to buy, when it dips to a certain level. We are trying to sell or find short opportunities in this downtrend. Okay, again, the concept is we don't want to swim against the current. We want to swim with the current. If it's going downstream, right, we want to find opportunities to join this downstream instead of going up. Okay, so the question here is then, when do we switch sides, right? Because when we talk about reversal trading, right, so if it's a downtrend, we are supposed to go for short positions, right? But when do we actually switch sides to the long position? Okay, so one of the methods, right, is to use market structure. We are trying to find the change in the market structure. So what do I mean by that, right? Okay, so notice that in this downtrend, right, prices are creating lower lows, right, and lower highs, right? So it's go down, it retrace a bit up, it goes down more, then the retracement is lower than the previous high, right? So what we're seeing here is a lower low and a lower high. Okay, so we notice that from the price action here, this is a obvious downtrend. So when prices are in downtrend, right, this is being formed, and what happens next is that you notice that the last lower high, right, if that happens to be in this price change in market structure, meaning to say instead of forming now a lower high and lower low, right, prices has broken above this previous lower high. Okay, then you notice that if it breaks above, then this is actually the first indication that the trend may reverse. Okay, and I use the word may because it may not happen. So what happens is that sometimes in trading you notice that this market structure of a downtrend is broken, right? That is forming a higher high now, but prices can consolidate for quite a while, or it may even consolidate and then break below again, or immediately when it breaks up, it can break below again. Okay, but again, if it's going to change to an uptrend, right, then definitely, right, more often than not, prices will break above the last lower high, and this is the first indication. Okay, you notice that when this change happens, right, in this example, right, the previous resistance here, right, is actually forming like a support level, right? Right. So the previous lower high right now, when prices were broken, it went back down a bit. It tested the previous lower high. So this can actually be like a potential entry zone. Okay, because right now from downtrend, it changed to uptrend. So we are not looking to short anymore. If there's a change in market structure, we are looking for long opportunities. So where do we go long? One potential way is to wait for it to retrace to a previous resistance that has turned support. Okay, so when you've broken this lower high previously to form a higher high, right, then you know that the downtrend is also invalidated, right? So that when it's invalidated, then when it retraces back, it is a potential entry area. But of course, other than just entering it, immediately, you can also look out for things like a candlestick pattern reversal. So you notice if there's a hammer falling, if there's a hammer forming, then something like that, right, to use as an additional confirmation. Okay, so that's the thing we want to look at. And notice that the previous lower high here, which is the previous resistance turn support, is also a area that you can look to buy. If let's say you didn't manage to get in here at this the first retracement, then you can potentially look for retracement using this as reference points as well. Okay. So again, this is can happen at all time frames. You can see this in a 1 minute chart, daily chart, hourly chart, 4-hourly chart. So it's just that the higher the time frame you go to, then the better the trend will hold. Okay. So here is just another example of a change in market structure where previously we see, higher highs and higher lows, right, forming. And once the low was broken, right, over here. So once this level was broken, the uptrend was invalidated, right? So there was a change in market structure. It wasn't forming a higher low. Instead, the low when it broke this lower low, right? So when it broke this level, then you see the previous lows, right, could become an area for you to trade a reversal to enter into a short position because now the uptrend is invalidated, right? The market structure has changed. So the first method is simply to look at the price action itself. Okay, and look at a change in the market structure where the higher lows, right, are broken to form a lower high. Okay, so the higher lows are broken and now it forms a lower high, then it forms become a lower low, lower high, lower low, lower high. So from uptrend, it breaks the structure, it becomes a downtrend. So again, this could be a potential trend reversal pattern. Okay, so this is a potential reversal when the market structure is changed. Okay, so notice that the previous support, right, the previous low, it has turned resistance, so potential entry as well. So the second way, right, to look at things will be to look out for trend reversals, right? So many traders, they're actually using this thing called the moving average, right? So in this particular example, if you look at price without, looking at lower highs or lower lows, we just look at price alone. And then what we do here is we add in this indicator called MA, okay, the moving average. And then the period we use 200, okay. So 200 is actually kind of like a long-term average price. So you can actually use this as kind of like a trend indication. So when we talk about the 200 moving average, right, this is the line. So this line is actually the average price for the past 200 candles. And of course, if we are looking at the daily chart right now, the line here actually tells you that this price point is actually the average price for the last 200 days. If you're using a 1 minute chart, right, then this is the price point for the last 100 minutes, last 200 minutes combined. Okay, because it's 200, and if each candle is 1 minute, then it's the last 200 minutes, the average price. Okay, so it depends on the period you are using. But what we are trying to do here is that we're trying to look for a long-term trend indication. Okay, so since this 200 moving average is the average price for the last 200 candles, right? Then this can be used as a longer term trend indication. So if prices are above this line, okay, so if you notice that this is the line, if prices are above, right, then we will say that the bias will be towards the long side. So we are looking for buy opportunity because it is in an uptrend. Okay, so I repeat again, if price is above the 200 moving average, then we will have a bias. We will try to have a bias to, to look for buying opportunities because we don't want to swim against the current. We want to be with the current. So the another indication here is that, if you notice that after using this 200 as a longer term trend indication, you notice that the price may reverse actually if this level is broken, right? So if the 200-day moving average, if the price broke through it, then it's a potential sign of reversal as well. So in that case, when prices break below, right, we are not trying to buy here. Okay, so after it breaks below, the trend is not in an uptrend anymore. So it's a potential reversal, and now we are looking for short opportunities. Okay, so instead of buying, you notice that, like example at this portion, right, if prices is below this line, the 200 line, is a downtrend. So what we are trying to do is we are not trying to buy when the price go lower. We are trying to go with the trend to look for selling opportunities. Okay, but of course, if you use this 200 moving average on a very low time frame chart, like a 1 minute chart, then it isn't really a long-term trend. So try to use it on a higher time frame, such as like a daily chart, 4-hourly or weekly chart, to determine the longer term trend. Okay. So from this chart, which is the same as the previous chart, so it's using this same thing. So what we can do here is we notice that this previous dotted line, right, it's like an area of support in the uptrend, right? So in the uptrend, prices bounce off this dotted line a few times. It's become like an area of support. Okay, when prices were above, right, if you're thinking that, is a support level here, you want to go long, I think that's fine. It's a valid setup if you went long at these levels. But now that price has broken below out of this 200 moving average, right? So this signals a potential reversal. So a valid entry could be, to wait for price to retrace to the previous support that's turned resistance. Okay, and so what you do is that once it broken, right, so even before all this price has formed, right, once price has just broken, you can look left, right? So it breaks this line. You look left, you notice that this is a previous support, and then you can look for retracement when it tests this previous support that's turned resistance. Okay, so when price tests this, right, this could be a potential sell opportunity. So what you can do here as confirmation, again, is to look out for candlestick patterns. But later on, I will share with you some of the other indicators that you can use as well. So here, what we are doing here is that you can use simple support and resistance levels to trade reversals, such as the gray resistance zone. So if you miss this initial entry, right, you can look for resistance that's forming to try to see if, if price managed to test a few times, if it's a strong level, it could be a potential area for you to short as well. Okay, you can also, other than looking at support and resistance, right, you can also add in other moving averages line, a shorter term one, to use them as like a dynamic support and resistance to look for entries as well. Okay, so notice here, price bullish above the 200 EMA, sorry, 200 MA. Okay, so it broke and then now it turned bearish, so it's a downtrend, so we are looking to sell. Okay, so another example here, right? So previously it was in the downtrend because why it's trading below the 200 moving average, right? So lower highs, lower lows, downtrend. So once this level 200 is broken, right, it will be, we are trying to look for buying opportunities. So this 200 line, right, is actually kind of like an indication as well. If prices are trading above, right, then potentially it is in an uptrend. And if prices are trading below, then it will potentially be in a downtrend. So if prices are above, we look for buying opportunities. Prices are below, we look for selling opportunities. Okay, so again here, if you broke above, right, you look left, right? So left, where was the previous resistance that turned support? Okay, just look left. There's one level here. So you managed to retrace here. You can look for some setup if there's any opportunities in a shorter time frame, or maybe over here, right? So there was a previous kind of like a small support level before it broke again. So if you draw one line here, right, maybe you can be able to find long opportunities as well as prices try to retest these levels. Okay. So the next way that we can spot potential trend reversals, and this is one of the more popular ways, right, is to use this indicator called RSI. Okay, so RSI, what it means is that RSI is this indicator called the relative strength index, and this indicator is actually a momentum indicator, and what it measures is the change in the price in a given period. Okay, so when you add this indicator RSI into the trading platform, okay, so if you are trading with the other IG officers, you will be able to see this indicator as well. So it's not just from the IG Singapore side. So if you right click on the platform, you add an indicator in, right? And then you right click, add the indicator called the relative strength index. This is what you will see at the bottom of your chart. Okay, so what you're seeing here is not the price of the underlying market. This is just a index, right? So a number that shows you on this momentum indicator. So the basic idea behind this RSI, right, is to measure how quickly traders are actually bidding up the price, be it whether to bid it up or to sell it down. So it's the momentum that is measuring. Actually, this line it oscillates between 0 to 100. But of course, conventionally, a lot of people use two main levels, 30 and 70, to identify overbought and oversold levels. Okay, so how he actually does this is that how he actually gets this number is that it looks at the average gain in a given period, and in this case the given period is 14 by default. So the past 14 candles, what is the average gain and what is the average loss? Okay, so if this number keeps going up, right, this indicator keeps trending up, it means that the average gains are greater than the average losses. So what it essentially means is that there are more bullish candles than bearish candles. So you tend to see more green candles, more strong green candles than the red candles in a given period. And if you notice that this index, right, this RSI is trending down. So what it means is that the average losses are greater than the average gains. So you notice that the candles then in the price itself, right, there are more bearish candles than bullish candles. So if the bearish candles are forming too quickly in a short span of time, right, compared to historically, then it will tell you that prices, right, can potentially, if it's forming too fast, right, it can be potentially oversold. And then if the prices of the bullish candles, the average gains are so quickly, right, compared to historically, then it can mean that there's a lot of buying momentum, and then the market can be in an overbought. So if you use this indicator alone, right, I think traditionally for a lot of sorry, let me just move back. Traditionally, for a lot of new traders, right, what they do is that they just look at these levels. If it's oversold, they buy. If it's overbought, they sell. So that is one way that you can use. But sometimes when the market is trending very strongly, right, it can hug this overbought level for extended periods. Okay, so it can actually be overbought and then the price keep on going up. So that's not that's one way to use it, but that's not the way that you may want to use. You may want to consider other options on how you can use this momentum indicator. Okay, so one way that we are trying to use this indicator when trading reversals is to find divergence. Okay, and what do I mean by divergence? Okay, so this is the price of the underlying market, and this is the indicator. So usually when we talk about divergence, we are trying to find a disagreement between the price and the indicator. Okay, because in normal circumstances, right, usually it will be in agreement. When the price, right, you notice that prices are trending down, right, the RSI will also show like similar to how the price is, is trending. It also trends down. Okay, so when this happens, price is going down, the RSI is trending down. This is in agreement, right? So there's no divergence over here. But there will be a divergence in this example on the right, when you see that actually the prices are creating a higher high. Okay, so you notice it went to a high, it retraces, consolidates a bit, and then it went for to another higher high. But this time round, the indicator is not showing a similar trend, right, to go up and up. It went up, but then it went down. So notice over here, right, when prices form higher highs, right, but the RSI is showing a lower high. So this is what we call a divergence, RSI divergence. So in this case, it is a bearish divergence. Of course, it can be in a downtrend as well. So in a downtrend, right, if this indicator is not sloping down, if you connect, right, is pointing upwards, right, that is a bullish divergence. Okay, so divergence in a nutshell, what we are trying to see is the difference between the price and the indicator. So if there's a difference, right? So if you recall, what this measures is the momentum, right, based on the average gains and the average loss. Okay, so when the RSI goes into this overbought condition, right, when prices trended up so strongly and then the RSI is showing is in an overbought condition, it's due to because this gain here was in this short time frame in the last 14 candles, right, compared to historically, right, it went up too quickly, right. But as the price continue to go up, the momentum is lesser already. You don't see these candles forming up so aggressively, right? So it consolidates and then it still went up. So when price reaches a new high, right, and then this is showing a lower high, right, what it actually means is that the buying momentum is actually fading out as compared to the previous rally over here. So although prices are still going up, but the momentum is fading. Okay, so although still has kind of like a bullish attitude in this price action, but this discrepancy actually means that slowing momentum. And when that happens, right, what we are trying to look out for in this divergence then is that we are trying to look for an indication whereby, has the bulls run out of steam, and are we potentially looking to see a price reversal? Okay, so that's what we are using this indicator for, not to sell when it goes into a overbought condition, or we are not trying to buy it here when actually it's showing in an oversold condition. Okay, so we are trying to look at it from a bigger picture standpoint. We are trying to compare it to the prices. If previously the rally up, if the momentum was very big, right, the average gains were way more than the average losses. Right now, when the prices are making higher highs, are the bulls losing steam over here? So we use this RSI as kind of like we try to find this divergence by using this indicator. Okay. So here's another example of a bearish divergence. So we notice that prices are going higher, right? So higher highs. The indicator is showing lower highs. Okay. But does it mean that it will always 100% reverse? Okay. So what we play this out, you notice that, okay, so in the near term, it did reverse a bit. Okay, but it's not 100%, right? So in trading, nothing's 100%. So even if you spot this, right? So previously there was a very strong momentum here, right? And then when prices were still trending up, we can tell that from here the momentum is winning. So if you try to take a shot here, right, then it may not play out as well, right? So prices mean it's not 100% that it will trend down when you notice that there is a divergence. Okay, so in trading, you must accept the fact that it may not work 100% of the time. But what we are trying to do here is we are trying to find some confluences to enter a high probability trade. And we're not just relying on one indicator, right, to immediately, go downtrend, to short in a downtrend, or to buy in an uptrend. So it can also go into a consolidation phase when this happens before it trends up, or even before it trends down, right? It can also be in a consolidation phase as well. Okay, so just want to do a midway recap, right? So at the 30-minute mark, right? So here is what we covered so far. Okay, so I hope you managed to take away something so far before I go into a little bit more examples. So what we covered were the reversal candlestick patterns, right? So the hammer pattern, shooting star, morning star, evening star. So you get the idea. So there are actually many different candlestick patterns, and not just limited to those. There's head and shoulder, double bottom, double top, and things like that. So in trading, right, after you notice certain patterns forming, right, you can use candlestick patterns as confirmation as well. We covered on market structures, right? So basically what we are looking out for market structure is just by looking at price, are they forming higher highs, higher lows? What is it, how is it looking? Is it an uptrend? Is it a downtrend? Is it consolidating? And we also covered that how a change in the market structure can be a potential change in the trend. Okay, so if you notice that there is a structure forming, right, higher highs and higher lows, right? If the higher lows were broken, right, if there is a change in market structure, right, that is the first indication as well that there could be a potential change in the trend. So we also talk about using the 200-day moving average as a long-term trend indication. So what we do is that we reference the current market price. We look at this move line, right? So the average price. If prices are trading above, we want to have a bullish bias. So bullish bias means that we try to look for long opportunities. Of course, if you are trading very short term, even in a long-term uptrend, if you're looking to go in today and to go out, right, you have your own scalping strategy. No problem, you can also go short as well. But let's say what we want today, just for this session, theoretically, if prices are trading above this 200-day moving average line, right, we want to go, we want to follow the trend, to look for long opportunities. And if the line is here, right, prices are trading below, we want to look for selling opportunities. Okay, and of course, lastly, we covered a little bit on the RSI divergence, where we talk about conflicting signals between the price itself and the momentum indicator itself. Okay, so if there is a conflicting signal, right, that could also be a potential reversal. Okay, so now that we have learned all this, right? So what we have covered earlier in the last 30 minutes, right? What we have learned earlier, right? How can we actually use all of this information, right, to come up with kind of like a trading setup, right? Okay, so let's try to combine all this and see if we can come up with something. Okay, so the first thing that we are trying to look at, right, when we are looking to trade reversals, is to look at the trend indication again on the higher time frame. Okay, so what do I mean? So example for this euro dollar FX pair, right, on the daily chart. Okay, so example in this chart, we are looking at the daily time frame, and then we will add in firstly this indicator, right, the 200-day moving average. Okay, so we add it in, we get this smooth line that tells us the average price. And since price is trading above this 200 line, right? Okay, it's not trading below, right? So it's not forming here, it's forming above here. And we notice that, you know, the structure, right? Higher lows, higher highs. Okay, market structure is uptrend. Prices are trading above this 200-day moving average. So we want to have a long bias. Okay, so in the uptrend, we want to follow the flow. We don't want to try to sell here yet. We want to still look for buying opportunities. Okay, so in that case, right, you may be wondering, right? So we talk a lot about reversals, right? So in that case, when we talk about reversals, when do we actually sell, right? If it's an uptrend and then I'm sharing with you to keep going long, right? Then where does the reversal part fit into this bigger picture, right, of the long-term uptrend? Okay, so what we want to do then to in this uptrend, right? Firstly, we use the 200-day as an indication. We notice that prices form a higher high and higher low. Prices trading, right? So we have this long bias, and the reversal part comes in now in the pullback. Okay, so let me repeat again. So in an uptrend, we are still looking for buying opportunities. We are not looking to sell at the highs. We are looking to buy, but we are looking to buy at the lows. Okay, so how to buy the lows is to look out for reversal patterns in the pullback. Okay, so you notice that in the uptrend, right, it doesn't go one straight line, right, like a 7 o'clock to 2 o'clock line, right, directly straight, right. So when prices are trending up, right, it goes up, it pulls down, it go up. There's some form of pullback and retracement in the price. Okay, so what we are trying to, how we are trying to fit this this reversal strategy in is that we are trying to buy when prices are in a pullback. Okay, so we're trying to look for reversal pattern when it is bearish, short-term bearish, but long-term we are bullish, right? So we're trying to look for long opportunities in all these pullbacks. Okay, so how to look for long opportunities? Again, we look at from a higher time frame analysis, right? So in the higher time frame, in the daily chart right now, we know it is a uptrend. We want to go for long. So in these pullbacks, are we able to dive into a shorter time frame to look for these reversal patterns? Okay, so over here in the IG platform, what you can do is that you can actually split the chart into two. Okay, so you can actually split into 4, but I think it's a bit too small if you are using one monitor. So unless you're using a lot of monitors, right? If you're using one monitor, you can actually split into 2. So what I'm showing here is that this is the same as the previous chart here. Okay, so I just zoom into this particular retracement in this bullish trend. Okay, so this is a daily chart. Okay, so in the daily time frame, right, we notice that uptrend, right? Uptrend, prices above 200, you're looking for long. But in the daily time frame, in this pullback, right, I highlighted this gray area, and then let's zoom into this pullback in an hourly time frame. So when on a higher time frame, you draw a gray box, right, and then you use the split chart function and you dive into a deeper time frame, you can very easily, it highlights for you as well this area. Okay, so what we are trying to do here is that we are still looking for buying opportunities, but we're looking for reversal pattern when the price is bearish. Okay, so again, we are looking for a bullish reversal. So we are not looking to sell because the longer term, the higher time frame analysis is a uptrend. We are looking to buy. So we dive into a shorter term time frame to look for reversal pattern when the price is bearish. So the price will be bearish definitely when there is retracement in the higher time frame, right? So you dive into the lower time frame, you can notice that the prices will be bearish as well. So in this particular pullback, okay, so where can we actually find buying opportunities here? Okay, so where can we look for buying opportunities in this pullback? So I'm not sure if I'm able to spot any divergence. Probably I'll just leave this here. So you look at the price here. You look at this RSI indicator. Okay, so are you able to see if there's anything forming over here between these two? Okay, I'll give you about 10 seconds while I get a sip of water. Okay, so someone says they spotted divergence. Okay, so some cannot see. Okay, no problem. Okay, so let me just highlight it to you. So again, in this daily time frame, pullback, zooming into a shorter time frame, in this pullback, is there any buying opportunities? Is there any reversal we can do? Okay, so if you notice, right, over here is actually forming a lower low. Okay, but the RSI is forming a higher low. Okay, so I'll just highlight it over here. So for those of you who have noticed, right, there is like a bullish divergence here. Yeah, right. So as prices were forming lower lows, right, the indicator is actually showing a higher low. So this is a divergence between price and the RSI. So essentially, right, as prices were forming lower, this pullback in the uptrend, you go into a lower time frame, you notice that in this selling down of this retracement, right, in the bigger picture, right, so this is the zoom in part, right, when there people were selling, right, so we are trying to look for the selling pressures to ease off, right, the momentum to die off, and then if the indicator is showing that, you know, momentum is dying off, is losing its steam, then potentially when you notice this, you can go for a buy trade. Okay, so when you notice this happens, then this is a potential entry, or it can actually signal a potential reversal. And in this example, it did reverse, right? Okay, so we're still trying to follow the trend in the higher time frame. We're not trying to reverse or trade in the opposite direction in the higher time frame. We are still following the trend in the higher time frame, but we are trading the reversals in the pullback. So we are in the same direction of the longer term trend. Okay, so I hope that is not too confusing so far. So you get the idea. We always want to follow the higher time frame trend. And when we talk about reversals, we are trying to also get into the same direction as the higher time frame trend, but we're looking for momentum to fade off in this short-term pullback. Okay, so another tool that you can use, right, is to use other than this 200-day moving average, right? You can add in maybe like a 20-day moving average and a 50-day, a 100-day. And then you look at the price, right? If it's a very strong uptrend, right, you may notice that prices can bounce off the 20-day. And if it's in a very not so strong but still quite strong, it can bounce off the 50-day, right? Okay, so notice that there's some form of confluence here in this pullback, right? So in the higher time frame, the pullback is actually testing the 50-day moving average. So that's like another confirmation that this could be another confluence in the support level, a dynamics 50-day moving average as an additional support. And then you notice that in the lower time frame, okay, there is some form of a bullish reversal, right? So this a divergence here, right? So you can actually look for long opportunities at the support level. Look for candlestick patterns here as a confirmation as well if you want. Okay, so this serves as an additional confluence if you are, if you don't want to just use this tool, you want to add in more lines, and then if it happens to just very nicely, land at one of the moving average and it's kind of serving as a support level, then potentially it gives you more confidence and conviction, right, to enter the trade. Okay. So again, let's say right now, if we didn't manage to get in here, right? So let's say you didn't manage to get in at this previous gray zone, right? So this gray zone over here, you didn't manage to enter a buy trade here, right? So were there still opportunities to get in, right? So let's explore, okay? So in this uptrend, right, in this particular level of retracement, is there any other opportunity? So let's look at this here. Okay, so this is a bit zoom out because I highlighted quite a long period, and if we dive into the hourly chart, right, so this is the daily and this is the hourly. Again, this is just the zoom in version of over here. So probably a bit too compact for you to see, but if you're able to spot any signs of a potential reversal, you can actually, I'll just leave these 10 seconds for you to, try to exercise your eyes to try to see if you can find any. I think in this case, it's a bit small, so it may be a bit hard. I'll just leave this here for another 10 seconds for you to exercise to try to see if you can spot. Okay, so let me just show you over here. Okay, so in this higher time frame uptrend, right? You zoom into, we missed this gray area already. So is there any other more buying opportunities, right? So prices trend up, we don't want to buy, right? We don't want to buy at the highs. We want to wait for prices to retrace down. We want to buy the area of value and look for reversal patterns in this retracement. Okay, so you notice that there's actually one here. It's a very small one, right? Where prices form lower low, but the RSI is actually showing a higher low. So this means that the selling pressure is actually winning, right? And the sellers in the 1 hour time frame, right, they are potentially changing their bias to the long side, maybe. So what we can tell here is that selling pressure losing steam. Okay, so lower low price is showing RSI is showing a higher low. So assuming, let's say if you manage to spot back then you can reference your stop loss, okay, to the previous low here. So this is the previous low, right? So let's say this particular area is actually this first level down. So it's actually this area over here. Okay, so let's say if you are looking for a buy here, then potentially you can actually reference, look left, where is the previous support? The previous support was this gray area here. Okay, you look left. So you can put a stop loss below these levels, because if market broke below this level, right, then you know the um the higher low could have been invalidated as well. You know, the market structure, higher low, higher highs. If this is a low, it meant for a higher high, but this retracement, this low broke this higher low, right? It could actually mean a change in structure. So it can also invalidate the whole idea, right? So you may want to put a stop loss just below here. So if it breaks here, it invalidates everything, the upwards trend as well, maybe. So that's one way you can actually use simple support and resistance level as well as your stop loss level. Okay, so in that case, this will be quite a logical setup, right? Because if you put your stop loss here, you can actually write the trend up again. You can potentially have a risk reward ratio that is 1:2 or 1:3, because the reference here is not too far away. Okay, so again, the reference meaning to say the previous support and your entry is not too far away. So the gap between your entry and your stop loss is not a very big distance. And when the gap is not a very big distance, you can actually have a bigger risk to reward ratio, right? So if you put your stop loss somewhere here below the 200, right, over here, then what is your potential reward, right? Are you looking for a 1-to-1? Where if your stop loss is over here at this line, are you looking to only profit when prices reach here? So again, that will have play out if you do it 1-to-1, right? But if you always do if your win rate, let's say, is at 40%, and you always use this 1-to-1 risk reward ratio, then in the long run you are not making money as well, right? Because every time you win $1. Every time you lose $1. But you lose 6 out of 10 times, you only win 4 out of 10 times. So what you want is to have a good risk to reward ratio, again, to look at a good setup for you. Okay, so another example here is on the Nasdaq. Okay, so this is the Nasdaq 100 in our platform. We term it as the US Tech 100. Again, we look at the daily chart for the long-term trend indication. Okay, so this one is a bit tricky, right? So you notice that this is the 200-day moving average. Prices were in a downtrend previously, trading below, and then it tested, right, and then it broke the structure, right, from a lower high to lower low. It broke above the lower high, became a higher high, and then it also broke above this 200-day moving average, right? So now over here we try to have a long bias. Then you notice that at this particular portion, right, prices are supported by the 200-day moving average, right? So in this higher time frame analysis, right, it has potentially changed from downtrend to uptrend, right? Because why? Again, number one, change in market structure. Previously lower highs, lower lows, broke above that. Second, number two, is that the prices have broken out of the 200-day moving average, right? So this is the long-term trend indication. If prices are trading above, we want to have a long bias. Okay, so this is also essentially, it could be the start of a long-term trend, right? So this is the tricky part, right? Whether you are trying to catch the start of a long-term trend. So what we want to do now then, if you look at this blue area, right, and then we highlight it to a shorter time frame, right? So this is the daily chart, this is the 30-minute chart. So if prices are trading above and supported by the 200-day, right, and the market structure, the previous downtrend is broken already, right? So what we are trying to do is, our bias now is to look for long opportunities, right? But do we just enter the trade immediately when the price breaks above here? No, right? So if you recall, we don't try to trade the breakouts over here. We try to wait for confirmation, right? That after prices broke above, it's kind of like an uptrend. We wait for prices to retrace. So we are looking to trade the reversals in this retracement. Okay. So again, this portion, we look at this particular part, right? So are we able to spot any long opportunities here in this retracement? So this blue area in the daily chart, you zoom in into a shorter time frame, right? You look at the price action over here. Are we able to try to see if there's any divergence over here so that we can look for buying opportunities? Okay, so I'm not sure if you guys are able to see, but let me just show it to you again. Okay, so in the 30 minutes time frame, right, you notice that at this point, right, actually it formed, right? So there was a lower low, and then it shows that the momentum was fading, right? Because the RSI is showing a higher low, right? So this is a bullish divergence, right? So again, if you enter at this trade, right? So it's at this point, right? So if you put a stop loss somewhere here, right, you may have taken out, right? So again, it's not 100%, right? So I'm showing you there are two over here. So one is over here at this point and labeled as A. Okay, so you notice there's a divergence here. The other point is B over here. So B, you notice that prices are creating a lower low, but the RSI is showing a higher low. Okay, but let's take a look at A first. Okay, let's zoom into this particular area. Okay, so on a higher time frame, we are still looking at over here. Okay, and instead of here we are showing a daily chart. So in this we are looking. Okay, so let's look at the 30 minutes one first. Okay, so again this is A. So we are looking at this portion over here, A. Okay, so 30 minutes, A. So imagine if this was the price, the live price, right? Example, you are trading, you look at the charts, then this is what you see forming, right? So right now we don't know how prices will go. We know that, okay, well, prices are forming lower lows. RSI is showing a higher low. Okay, so what we do over here, right? We thought that, okay, maybe this could be a potential area for us to go into a long, right? Because longer term time frame, right, we have determined that prices were supported at the 200-day moving average. Prices broken above, price structure broken. We are looking to have a bullish bias, so we are trying to look for buying opportunities. There was a sell-off, and we noticed that there was a divergence here, right? So nothing wrong, right? So there's some form of confluence, and then let's say we look to buy, right? So prices trading lower low, RSI showing a higher low. So at that point, when this RSI is forming, right, you need to wait for it to form the higher low first, right? So before this green candle is being formed, right, the RSI can continue to trend down. Okay, so you don't immediately buy when you notice this. You need to wait for the candles to close. And this green candle, this bullish engulfing, right? So it closed up higher here. So notice that the RSI went up as well. And then when it went up, right, this low became a higher low. Okay, so again, this is not say it's not say a wrong setup. Potentially, you can try to enter a long setup. Okay, so that's one. Okay, so how then do we put a stop loss level to this, right? So how then in this particular 30 minutes chart, if you are looking to buy here, how can we reference a stop loss? So what we do is that we can go back to the higher time frame over here. Okay, in a higher time frame, you can use this ATR. Okay, so this is the average true range that measures volatility. You can look at from here, the default we put as 14. So it's the average volatility within the last 14 4 hours chart. You notice that in this higher time frame, it is about 75 points. Okay, so you may want to reference it to a higher time frame support level. You may want to add one ATR below it to put a stop loss, or you may just want to put it's entirely up to you how you want to manage, but we try to not to put it too far away so we can have a better risk to reward ratio. So you notice that this is kind of like a psychological level also at 12,000. So if you put one ATR below, it's somewhere maybe about 11,925. Okay, so how we play out again? So it didn't play out well, right? So within here, right, prices actually broke. So your stop loss over here, it should have been triggered. So that was a loss. Okay, so if we zoom back out, right, in hindsight, right, let's say if you took the trade, then that would have been a loss. You have been stopped out because even though there's a divergence over here, right, towards this side, even though there's divergence, nothing is guaranteed, right? So that's just the way it is. It is not that easy to catch the bottom. So prices can consolidate and break even lower. Okay, so let's say you continue monitoring, right, and then you notice that over here the same thing happened, right? So prices form lower low, but the RSI is forming a higher low, right? So you zoom into this portion again, right? Okay, so for B, right, again, so in this divergence, right, we notice that prices were again in the higher time frame on the daily, supported by the 200 moving average, right? So there was a hammer pattern forming over here in this. There is a divergence as well, right? So if you notice, price are forming lower lows, but the RSI is forming a higher low. And in the chart, you notice that in this downtrend, there is a hammer candlestick pattern forming. So same thing, you can reference it to a higher time frame using ATR to put a stop loss level, or you decide, and then for your take profit, you decide to trail it. Okay, trailing it means that you don't put in a particular level. If prices go up, your stop loss immediately adjusts itself according to the trend. So you try to capture as much of the uptrend as possible, the whole swing. So let's take a look at how this played out. Okay, so so this was B. Okay, so this was the B. So when we enter a buy here with the hammer pattern, right? So eventually this time the play worked out, right? And prices did reverse. So in the daily chart, right, prices also bounced off the 200. and the 30-minute chart started to trend up as well. Okay, so the reversal did happen here, and you did manage to capture the dip here using RSI divergence and a simple candlestick pattern as confirmation. Okay, so again, the direction is still going to, we are still trying to find the same direction, right, as per the higher time frame. Okay, so we are not trying to sell. If the higher time frame is in an uptrend, we are looking to buy. But what I wanted to highlight is that when we are trading reversals, in this case, then we are trying to look for reversals in the pullbacks in the higher time frame by zooming into the lower time frame. Okay. So again, this was a trade. Again, if you missed this, right? So if this was a trade that wasn't taken, right, then there will still be future retracements as well, right? So this was the blue area that we zoom into. But of course, in the uptrend, right, prices will always still go up, and there will still be some form of retracement. So again, you need to zoom into the lower time frame, into this retracement, to look out for opportunities, buying opportunities, reversal patterns forming. Okay, so again, what we covered today was a retracement in a longer time frame. So if you miss this, there will always still be opportunities. But the key thing we want to take note is that as we are trading, right, we want to always limit our risk, right? We want to put in a stop loss level. Okay, and then we can reference a very simple support, previous resistance. We can use moving averages as dynamic support resistance. And then if we combine it, right, if the setup gives us a good risk to reward ratio, right, then that is a trade that we may want to take, right? So combine for all this, right? If everything there's confluence, you have good risk to reward, right? Then potentially you should be able to see a better outcome. Okay, so let me just see if there's any questions before we end. So it's reaching 8 soon. So which time frames are typically used for the long-term and short-term graphs? Do differ this for various shares, Forex? Okay, so we have a question that's asking on the time frame, right? So this time frame, right? So usually for time frame, right? You can for long term you can use at least like a hourly or 4 hourly, but for even a stronger trend indication, right, you can actually use daily or weekly. So again, there's no right way to do it, but the higher you go, right, then the more accurate the trend will be, right, the stronger the trend will hold if you're referencing it from a higher time frame. Okay, and if you dive into the short-term price action, right, to look for reversal opportunities, right, then which time frame to dive into? Again, it depends on your whole strategy, your whole setup, right? So let's say if you are doing to do a swing trade, if you're looking at a 30 minutes chart, are you expecting to exit the market today? Because every candle forming here, right, takes 30 minutes, right? So if you're looking to do a very short-term trade, you may even want to look at just the 5-minute candles. Okay, so you may be looking at short-term trends like the hourly chart for the long-term indication, and then your setup, you're looking to enter into like a 5-minute chart or 1-minute chart to find these reversal patterns. So it's depending on you, on your time frame, how long are you planning to hold the trade, and things like that. Okay, and in regards to the different asset class, okay, so you're asking, if this can be applied to various shares, do they differ? No, so this is just theoretical on price and indicators. It doesn't matter if you're trading, let's say, shares, Forex, crypto, indices. Okay. So another question, if the reversal signal is wrong on the shorter time frame, is it better to cut or continue to monitor? Okay, good question. Okay, so sometimes you notice that in the longer time frame, it is uptrend, right? So it is above the 200, right? But in the shorter time frame, you notice that as you dive lower, right, in the pullback, right, then the prices are below. Correct. I think it's natural also, because if you look at the short-term price action as prices are going down, right, then naturally in the short-term time frame, right, the chart will show conflicting signals, right? So more often than not, you notice that if you are trading these pullbacks and you are using moving averages, right, you notice that there will be some sort of like a conflicting signal in the shorter time frame, but it's totally okay. So what we want to do is that we still the main intention is to still go with the direction of your longer term trend indication, and then just look for potential reversals here in the shorter time frame. Do you mark price? Do you mark the price and RSI lines from the top bottom? Okay, so yes, you can actually mark from the top or you can mark from the bottom. So as long as what you're trying to do is to find prices either forming a lower high or lower lows, and in the RSI higher lows and higher highs, that's fine. So as long as you notice that the direction is conflicting, then that's a divergence. Okay, so Okay, so just to give to end off, right? Because we are reaching the time already, I don't see any other too much questions as well. So to end off, just want to highlight that reversal trading, right? Again, it is used. We are trying to identify the potential changes in the market directions. It can be bullish reversal, it can be bearish reversal. But what we want to do is we want to use a higher time frame analysis to spot reversals in lower time frame, right? So again, try to trade in the trend of the higher time frame and spot reversals in the pullbacks. Okay, and of course, you still need to have a solid risk management plan for the trade setup. If you notice a reversal pattern, but the trade setup, right, the logical place to put the stop loss is just too far, the risk reward is not making sense, then you can also choose to skip the trade, right? You don't have to take every trade. Okay, so if there's a logical setup, then take it. If not, then maybe you may want to sit out. Okay, so I hope this session has been insightful for you. So I hope if you are new, you managed to learn something, or if you are experienced trader, I hope I'm able to kind of value add a little bit more to you today as well. But if not, right, since it's past 8, I don't want to share so much on our social as well. But just to highlight, if you are new, we have this IG webinar library. So you can actually look for Google just IG webinar library Singapore, right? You notice that we have a lot of content, a lot of we invited a lot of professional speakers to give seminars, webinars. So they share their trading strategies, what indicators they use, what they look at. So all this content are free. So if you're new to IG or trading on a demo account or trading with other brokers, just feel free to take a look at our content as well to give you, just for education purposes. And for Instagram, if you are keen, just search for IG Singapore. We have some social updates there as well. And this is the Telegram group, right? So if you are looking for on-the-go news, right, we have a group of analysts, right, writing every day on what's happening to the markets, a summary of what's happening. So you can also read them on your way to work, etc. And lastly, before I end off, right, I just wanted to leave this QR code here for a minute. So I will deeply appreciate it if you guys are actually able to comment a little bit on today's session, whether it's useful for you, if you like this kind of content on, some form of like trade setup, TA. So if you think these are content that you like, just let me know so we can actually try to, invite speakers to, share with you similar content. Or, if you don't like it, you find that, there could be some improvement points. Don't worry about it. It's anonymous. Just let me know. Just put it in the feedback form. So this, ways that we can improve as well in terms of our content. Okay. So if not, we have come to the end of today's session. I hope it has been of use to you, and I hope it gives you more perspective when you're looking, at trading. And if you see certain setup happening, hopefully this gives you a perspective as well and give you, more ideas to spot opportunities as well. Okay, if not, I want to thank you for staying with me throughout all the way from 7 until now. So it's 2 minutes past 8 and I'm going to end the webinar. Once again, thanks everyone for still staying with me, and I will see you guys for the next event that we have. Okay, so good night, and yeah, just look out for our upcoming events. Cheers. Bye bye.